Bitcoin. Today we're going to discuss Bitcoin and a few other asset categories, and then I'm going to take you through an example of how you could kind of get your own Bitcoin craze started, how I think part of this developed, and my thoughts on where it's going to take us. As an appraiser, I've looked at Bitcoin for years, I've known about it for years, and every time I've drawn the same conclusion. It's not backed by anything. Trades could be manipulated by certain insiders. Who the hell invented it, and why does that person have all the money? Does that seem reasonable? That someone just was able to create money and people are buying into it? And then how many greater fools are there out there that are going to eventually buy this? So when you speculate, the whole game is to make sure that you get a hold of something and then you can pawn it off to somebody else in the future. So to do that, there has to be a greater fool. And right now, I have this feeling like we're getting to the point in the Bitcoin world where we're running out of greater fools. There's still some of them out there, don't get me wrong, but now that it's extremely expensive, it's going to be a lot harder to find those greater fools. So I wake up, I kick myself on a daily basis. Didn't want it at 200, didn't want it at 1,000, didn't want it at 5,000, didn't want it at 10,000, certainly don't want it at 15 or 16,000 where it is now. However, at any time in the last year or two, had I bought it, I would be flying a jet like everyone else who got lucky and or had the courage and confidence and faith and everything to get in early. So congratulations to you guys, but I'm sure there are a lot of people on the sidelines that have seen everyone make all this fabulous wealth and they want in on it, and I'm just here to talk a little bit about some of the other bubbles that I've seen in my lifetime. So I have seen, at least I was an adult for the dotcom bubble, and I was an adult for the recent housing issues that we had in around 2006, 2007. So let's talk about the dot-com bubble in late 2000, early 2001. So I was a grad student and I had a professor just preaching that we needed to dump all of our money into the stock market. NASDAQ's on fire. It's going to double. It's been up 30, 40, 50%. And it did, right? The problem is he was preaching to the wrong choir. I, as a student, had no money. Didn't make any investments, so I was basically spared that bubble when it popped. Got lucky on that one. How about the housing bubble? I lived in one of the target, big bubble states. I live in Scottsdale, Arizona, and around 2005, I was like, hey, got to get in on this. All my friends have many houses. They've got rental properties, everything. I need to get in on this. I went to look at a condo that went on the market at 8 o'clock in the morning. I went in there at noon, said, yep, I'll take it. My realtor called up the other realtor and said, oh, sorry, it's already sold. And I said, well, how could it already be sold? How did they know that in the course of 3 or 4 hours that there weren't going to be bidders that were willing to pay more? And they said, oh, this one was already, the winning bidder put in a bid way over listing. Okay, but how do they know I wasn't going to put in a bid higher than that? And the realtor said to me, well, we're not sure it's going to appraise for that. Okay, right there. As an appraiser, that scared me. So I backed off the housing market. And again, I was spared. However, this time I was fortunate. I saw some warning signs and stayed away. And I didn't purchase my first house until the end of 2009. So well after, the bubble had popped and valuations were stable. So right now, a Bitcoin is around 16,000 or so. Now, the US GDP per capita in 2016 was around 57,000. Okay? Which means if you wanted to invest in a Bitcoin, you'd be sacrificing approximately a quarter of your year's worth of earnings before tax just to get a hold of a Bitcoin. In perspective, had you bought one in 2017, it would have only taken you about 1/57th of your year's earnings. That should be a pretty key sign to you that it's been on an incredible run, but people are speculating on it, and to get in at this point, would you really sacrifice a quarter of your yearly earnings for the chance that somebody later might sacrifice half of his yearly earnings? Or maybe all of their yearly earnings? Think about that. It's a scary, scary situation right now. I just saw an interview by the Winklevoss twins, who own a huge portion of the Bitcoin market. And they said, Bitcoin is going to be gold 2.0, right? It's more portable. You can deal drugs and whatever else that Bitcoin can do for you. Valid points, right? It's very portable. It's easy to transfer money. But wasn't it easy to transfer and store wealth at $1 a Bitcoin like it was in 2011? Probably even easier than it is now, if you think about it. So they think it's better than gold. Let's talk about gold. Gold has been collected and used by people as either a currency or jewelry for thousands of years. Why? It's pretty cool. I mean, it's got luster, it's shiny, right? That's a fun part about gold. And it's malleable, right? You can pound it with a hammer and stretch it into the skinniest little piece and then make any kind of jewelry with it. You can bond it with other types of metals and even stretch it out further. It's a fun little metal. You can hold it in your hand, okay? Pretty cool. Downside to gold, it doesn't do anything, right? If I had a piece of gold, an ounce of gold, 1,000 years ago, today I still have an ounce of gold. 100 years ago, ounce of gold, today, ounce of gold. So it doesn't produce anything. It doesn't have any income on its own. I can't really do anything with it. So for Bitcoin to be gold 2.0, where they're drawing a lot of their investors or a lot of their excitement is from people who do not like fiat currency. That's kind of part of the draw of gold, right? So we could go into a huge discussion about currency, the American dollar, all that stuff. But I just want to point out a few little things that I've noticed as far as one of the downsides to American currency is going to be the inflationary aspects. But when people talk about inflation, they forget about a few of the things that have been happening that are actually deflationary that occur in our society because of technological leaps or changing preferences. So as a kid, I used to be able to get a Domino's pizza for $10. I can still get a Domino's pizza for $10. When I was a kid, my father, his radiology practice had an office computer. He paid $17,000 for this computer, and I guarantee you that my cell phone is thousands of times more powerful and only costs like $800. Okay. The last one is TVs, right? Just imagine or remember back to the first time you saw one of your friends get, say, a 50-inch plasma screen. You just stare like, wow, and then they would tell you how much it costs, and again, you'd say, wow. A 50-inch, ultra high definition, which is 4 times better than a plasma, probably even more than that, would definitely cost you less today than that 50-inch plasma would have back then. So there's a few things that have kind of gone down in price, but obviously there's a lot of other stuff that has gone up in price over the time. So another opportunity or another asset class which you could put into is obviously stocks. So what's cool about owning shares of a company is that you're entitled to a portion of the assets that the company owns, and usually companies own something. You're also going to be entitled to any kind of share of the profits that they make, which generally come in the form of dividends. So, you're going to get a quarterly check, maybe a yearly check from your company, and you're free to do whatever it is that you want with that money. When I opened up my browser this morning, the first 2 articles that I saw were for Star Wars and for Disney is purchasing the film and TV rights from 21st Century Fox. Okay, so those are the first two articles that I saw today, and I'm like, okay, while I'm doing this, let's research Disney stocks. So, had you purchased a share of Disney stock anywhere from about 1980 to 84, when it was roughly $1, had you exchanged $1 then, you would have one share of Disney stock. And so for the last 30 some years, you would have collected a dividend every quarter or every year from Disney. Now, 3 times in this time span, it's split. So your one share would have actually turned into 48 shares. And then today it's worth over $100, and it has a dividend yield of about 1.5%. So every year you could expect a check to come to your mailbox from Disney for about $1.50. Now remember, that's $1.50 per share. You now own 48 shares. So you're getting more like $72 a year in dividends from Disney going forward. And if for some reason they decide to sell their business, when they sell it, they've got a lot of assets, a lot of value. You could also cash out at that time. So your investment would have been an extremely profitable investment had you bought Disney back then. Okay, I promised that we were going to look at an example of how a Bitcoin kind of world can start, who the biggest winners are going to be in that kind of scenario. So for this example, imagine that there is a tiny island. It's got 13 people that live there. On this island, the only thing that you can produce is a coconut. You can go to work for a day, climb up a tree, grab a coconut, come down. That's your day's kind of earnings, if you will. So of these 13 people, 3 of them, which I'm going to call the whales, already have 10 coconuts in their possession each. Okay? Everyone else has nothing. And you get to choose as a citizen whether or not you want to go to work or sit around and do nothing. Those are your choices. 1 coconut if you go to work, 0 coconuts if you don't. Rather than going out and getting coconuts, I've decided that I'm going to be an inventor and figure out a way to fleece these other people out of their hard-earned coconuts. So in order to fleece my fellow citizens, what I've decided to do is take my awesome pen, which only has the ability, and I'm going to make sure everyone understands this, only has the ability to be used 10 times. I'm going to take that and I am going to take 10 of these amazing discs and I'm going to sign them. And they're going to become Ross coins. Okay? So, boom, a Ross coin. Damn, you want one of these, don't you? Well, I have 10. And remember, this is the entire world supply of Ross coins. No other Ross coins are ever going to be made, okay? Very important to know that this is a very scarce item. So now that I have my 10 Ross coins, what I'm going to do with these is I'm going to keep 1 for myself, and I'm going to talk to the 3 whales in town and tell them about my plans. My basic plan is we are going to manipulate the market into believing that these have an amazing amount of value. Once we can get the normal citizens to buy in, we will then sell. We will then have their hard-earned labor. So we don't have to work for it. We've got a system. So these 3 I'm going to give to the whales. In exchange, they're going to give me a coconut each. Seems pretty fair, especially that they know that they're going to make a lot more later. Okay. The other 6, what I'm going to do with these is I'm going to bury clues in the sand on the beach, and once you find this clue, it'll tell you how to collect your Ross coin from me. I will gladly exchange a Ross coin for the treasure note that they find, okay? So I'm going to hold on to these 6 because nobody's found them yet, right? So on day 1, I have sold my 3 Ross coins. I still have 1. I'm holding on to 6 in reserve, and 3 of them are in the hands of the whales. So here's what I instruct the whales to do. I tell the whales to go out and make some trades, make sure everybody knows about the trades so that everyone is convinced about the perceived value of these coins. So what they do, on day 3, I'm going to sell a Ross coin to whale number 1. And he, in exchange, is going to give me 3 coconuts, okay? He's pretty excited. He knows what's going to happen. On day 4, whale 1 is going to sell his 2 Ross coins for 4 coconuts each to whale number 2. Okay, so now Ross coin is worth 4, according to the market. On day 5, worker number 1 gets really excited, and he has been collecting coconuts for the last 5 days, right? He's got 5 coconuts in his hand. What's he gonna do? There's a whale out there. Whale number 2 says, I'll sell you a Ross coin. 5 coconuts. Worker number 1 is thrilled with this deal. He can hand over just 5 days of labor and get a hold of one of these Ross coins. And he knows that just a few short days ago, somebody was able to get these for 1. Think about those tremendous profits that have already been made, and he knows it's only gonna get higher. So he's really excited. Day 6 goes by, and I go out and buy a coin from whale number 2 for 6 coconuts. I don't really care about the price. I just need to make sure that everyone knows how valuable these are. Just yesterday they were only 5. Today they're 6. I've got 6 coconuts. I'm gonna buy one. Okay. Day 7. All of the miners come back to me with their little slips. They found all of the keys, the treasure maps, whatever, that are going to lead them to exchange their Ross coins, or in exchange for Ross coins. So these guys, they mined their Ross coins. I'm going to give them to them. Congratulations. You're now the proud owners of 6 Ross coins. Just like that. Way to go, guys. Of course, you spent a week mining those tokens when you could have just gone to work for a week, but it's okay. You know you're going to be fabulously wealthy later once these go up in value, so it was a good investment. No other transactions occur that day, okay? On day 8, whale 1 buys a coin from miner number 1, who just got his coin, for 8 coconuts. That guy's excited, right? Put in 7 days of labor, got something, got 8 coconuts out of it. He's pretty happy. So let's take stock of where we are. After 8 days, the whales and I have 40% of the market still of Ross coins, which is where we started with, so that was pretty good. And the market is now valued at 80 coconuts. Pretty cool, right? Because the whales started with 30 coconuts. I started with 0 coconuts. The whales still have 27 coconuts, and they've got an extra, the 4 of us have an extra 32 coconuts worth of paper value. So we're pretty happy. So the top 4 people on this chain, on this pyramid, you might say, have 59 coconuts worth of value on paper. Started with 30. So people at the top are pretty happy about this system. On day 9, worker number 2 wants in, and he pays miner number 2 9 coconuts. So think about worker number 2. He's been mining for 9 days straight. So think about worker number 2. He's been working for 9 days straight. He hands in all of that labor, all 9 of his coconuts, to get 1 coin from miner number 2. He's pretty happy. He is so happy with his decision to join the Ross coin world that he's retired, right? He doesn't need to climb up a tree and get coconuts anymore. He's totally in it to win it now as a Ross coin speculator. Day 10 comes by. Worker number 3 is looking at his 2 retired friends who used to climb the tree with him and work all day to get a coconut. They're retired. Why? Because they discovered Ross coins. They're fabulously wealthy and they don't have to do anything anymore. Worker number 3 says, I'm in. Goes up to miner number 3 and says, here's 10 coconuts. What do you think? Miner number 3 says, yeah, took me 7 days of labor. Sold it for 10. I'm pretty happy. Now on day 11, trading is halted. Why is it halted? Somebody senses a problem, okay? The coconut wealth of the town, of our community, of our island, has increased because workers 1, 2, and 3 have gone to work until they retired and got into the speculation game. So Ross coins had traded at 10 coconuts each, and now on day 11, I mean, things have been going up. You would expect that you could get 11 today, right? Well, the problem is there's only one person in the entire community who's sitting on 11 coconuts. That person's at the top of this pyramid scam. There's no way they're handing their hard-earned coconuts over for a simple Ross coin token, okay? Now that the market's at a standstill, let's take a look at the results, okay? On paper, I have 10 coconuts worth of Ross coins. And the whales have a combined paper wealth of 57 coconuts. Miners 1 through 3 have none of these Ross coins, but they have a real wealth of 27 combined coconuts. So far they're the winners. So these 3 miners with 27 coconuts realized that they worked for 7 days each, or 21 days. So they really should only have 21 coconuts. But since they were in on this early, they did all that fabulous work mining these fabulous Ross coins, they've got 27 combined coconuts. They made a 6 coconut gain. They're pretty happy. Miners 4 through 6 each have their coins still. They're happy. Those are worth 10 each, right? Maybe even 11. They're excited. Workers 1 through 3 are retired, right? No reason to climb up the tree anymore. And they have 1 coin each, which means they've got 30, maybe even 33 coconuts worth of value, right? Worker 1 only had to work for 5 days. Worker 2 worked for 9 days, and worker 3 worked for 10 days, all so they could have this magical, amazing coin. So if the price goes down, worker 3 has the most to lose as they put in 10 days worth of work into 1 coin. Okay, so day 12 comes, investors are all in a panic, okay? As a society, the people at the top of the pyramid realize this whole society now has 54 coconuts. But on paper, according to our last transaction, these are worth 10 each. So we have 100 coconuts worth of value tied up in these. So here's the part that you have to look out for. The people at the top, so that's the 3 whales and me, the inventor, we make up all the rules. So we can enforce trades that are beneficial to us and maybe delay some trades that might not benefit us. So I sell mine first. I'm able to execute that trade first. And what I do is I offer my coin at a discount of 9 to miner 3, who jumps on it. Why wouldn't he? It's at a discount. Whale 1 sells his for 8 coconuts to miner 2. Again, discount. Go for it. You know these are things that are going to go through the roof. Whale 2 sells his at another discount, a further discount of 7 to miner number 1. Okay? Whale 3 offers his up for 6 coconuts, looks around, and finds out that the only people that have 6 or more coconuts are above him on the pyramid. He doesn't get to sell his, does he? Not for 6. Whale number 3 still wants to get out of his position knowing that the game is over. So he goes to miner number 3 and says, I'll give you this for 1 coconut. Miner number 3 thinks about it for a little bit, decides, well, hey, it'll go back up. Not a problem. I'm in. Day 13 comes around, value drops to 0. The entire island still has 54 coconuts on it because everyone stopped working. 52 of them are held by the whales and me. Okay, so that's 96%. On day one, the whales had 30 of the 33 coconuts, so they had 91%. So they've earned or pillaged 13 coconuts out of this scheme from hardworking laborers that were below them on the scheme. But they actually control a smaller proportion of the island's wealth. Why is that? Well, they have more stuff, but there are now more coconuts on the island. Okay, so their purchasing power is actually, it's been reduced because I now have a lot of coconuts and I can choose how to spend them. Miners 1 and 2 each work for 7 days mining up these Ross coins, okay? And they have 2 coconuts to show for it. So they weren't the winners. So that leaves me with 9 coconuts, okay? I invented the Ross coins. I started with 10 of these, plus an amazing marker that I limited the supply of only 10 of my signatures. I turned that into 9 coconuts, okay? So the whole point of this exercise is the people at the top, not only did they manipulate things to make it work, but they got to manipulate it to cash out as well. And most importantly, the person who invented the scheme is the one who comes out as the biggest winner. So if Bitcoin were to crash, the people at the top are still going to make their money. It's the people at the bottom who are going to lose their money. Okay? So all of you who are thinking, hey, I'm going to get in at 15,000, 16,000, whatever it is, because I know it's going to go to 30,000. You're still going to look like geniuses if it does go to 30,000 and you can sell it. The problem is whoever it is at the end who's left when the music stops holding the coins, they're in trouble. Important thing that they talk about in the investing world, and that is that the market can stay irrational longer than you can stay solvent. So if you're thinking now is the time to short, maybe it is. If you're thinking now is the time to go long and hold on to them or buy more, not just Bitcoin, but any cryptocurrency, maybe it is, okay? Nobody has a crystal ball. But the downside to where we are now from 16, 17,000 probably isn't all the way to zero because these cryptocurrencies, they are very portable, fabulous in drug deals, fabulous in moving your money out of different countries or whatever. So as long as you trust that when the music stops, you're going to have something else in your hand, whether it's a car, some cash, some gold, when you exchange your Bitcoins, you'll be okay. But if the music stops and you're still holding them, you're in trouble. So recently the CBOE started a futures exchange, which theoretically should make the market balanced. Some people are going to take short positions, some people are going to take long positions, and we should eventually find a real value for these Bitcoins, okay? Now, I haven't been able to place any positions through E-Trade, Fidelity, or TD Ameritrade or anything like that. So I don't actually know who is buying and selling these future contracts, but I know it's not me because I can't figure out how to do it. So if you have ideas on how you could get into these futures positions, either short or long, leave them in the comments section below. And, you're welcome to leave any kind of comments that you want. I mean, I'm sure a ton of you think that I'm completely mad and think that Bitcoin's going to go to $1 million. That's fine. You're entitled to your opinion. You're entitled to put your money where your mouth is. Go for it, right? You can leave those comments below. You can leave that hatred below. I'm not saying that you're wrong. It could happen. And then for all you other people who say, hey, it's going to go to zero, again, you're entitled to that opinion. Personally, I don't think it's ever going to go to zero. But I don't think that there's enough fools left in the world to keep pumping this price up. Now, when people figure that out, it unravels pretty quick. So you're not going to be able to hit that sell button and get out as fast as you think. So I'm sure there's a lot of people that maybe even have stop positions in, right? When it falls to 12,000, that's it, I'm out, but I'm going to keep riding, whatever. I have a feeling that when this unravels, the people at the top of the pyramid, the whales and the inventor, are going to magically have a way where when they exit, their sales and their trades get executed and yours do not.